Welcome to Business Math. Today happens to be January 31st. And today we're going to talk more about percents. One of the things about percents, like probably the most important thing to know about percents, is what a percent means. That's even most important. That's even more important than all the calculations, because if you don't know what it means, then you're in deep trouble. Kind of like if you can't get the computer to work. Let's see. There we go. So let's take something like 27%, and then you tell me, what does that mean? 27%. Courtney, what does that mean?
27 out of 100.
Yeah, 27 out of 100. Exactly. 27 of 100, 27 out of 100. So it actually means 27 out of 100. 27 out of 100. So when you have 27%, can you write 27% as a fraction, John Tay?
27 over 100.
Very good. So that means 27 over 100. That's what it is as a fraction, isn't it? So 27 out of 100. And we can write that as a ratio, 27 to 100. That's a ratio. We don't use ratios really often, but once in a while, especially for some reason in the gambling world, they'll use ratios. But ratios, I like ratios usually written as 27 over 100, because then I just save the step of converting a ratio into a fraction. Let's see, how do you write 27% as a decimal? Let's go to Shay and Alva.
She's not here today.
Okay, let's go to Rachel and Tonka.
Can you repeat the question?
27 hundredths as a decimal. Change that 27%. You can either think of it as 27%, change that to a decimal, or 27 one-hundredths to a decimal. What is 27% as a decimal?
0.27.
Very good, 0.27. So, when you see 27%, it's 0.27. Now remember, or if you see 27 over 100, that's 0.27. When you see something like that, remember, if I give you a tricky problem, and I have you change, now don't let me fool you even though it's early in the morning here. If I have something of 0.28% and have you change that as a decimal, 0.28%. Let's go to Wyatt and Tonka.
28%?
28%. So 0.28% is the same as 28%.
Yeah. 28 over 100?
Well, let's see. Is that your final answer? Rachel, you want to help him out?
It's 2.8.
As a decimal, it's 2.8. Do you agree with that? Jonte?
No.
No, what do you think it is, Jonte?
0.028. I mean,
0.028.
No, 0.0028. Sorry.
Oh, excellent. 0.0028 is it. 0.0028. That's a tricky one. You see, when you change a percent into a decimal, let's go back to 27%. When you change that into a decimal, you move the decimal point 2 places to the left, so you get 0.27, okay? So now we have to move the decimal point 2 places to the left, and you do need to put in zeros. So that's why, Jonte, you got the right answer. It's 0.0028. All right? It's kind of a tricky one. You see, if you were to do this as a fraction, you could say, well, it's the same as 0.28 out of 100, which is correct. But this right here, 0.28 over 100, that is not a proper fraction, is it? Because it's actually, to make this into a proper fraction, what we can do is we can multiply numerator by 100, denominator by 100, and when you do that, 28 times 100 is how much, Jonte?
28 times 100 is...
Or 0.28 times 100, sorry. 0.28 times 100, how much is that?
28.
28. So the numerator becomes 28. And then what's 100 times 100, Courtney?
10,000.
10,000. So now you know when you take 28 over 10,000, and to figure out where the decimal point is, well, that would be 2,800. That would be 28,000. And that would be 28 10,000. In fact, that's how we read that, don't we? Because this is the tenths place, that's the hundredths, that's the thousandths, and that's the 10,000ths. So 28 10,000. All right? So when you get something tricky like 0.28%, see, before you jump to the conclusion, you say, oh, well, that's 28% or something like that, or 20, whatever you might think it is, 28% is different than 0.28%, isn't it? See, 0.28%, is that less than 1% or greater than 1%? 0.28%. Is that less than 1% or greater than 1%? Rachel?
Less.
It is less than 1%. So when you have, I'm going to erase some of this stuff here. When you have 0.28%, that's less than 1 chance out of 100. See, in rough terms, when you see something like 0.28%, you can say, that's about 1/3%. Now, actually, 1/3% would be 0.33%, wouldn't it? So I guess it's even a little bit closer to 1/4%. Okay? Because 1/4% would be 0.25%, wouldn't it? So when this right here, this 0.28, I mean, it's only going to happen if you're talking a probability situation, 0.28 times out of 100, which means only about once out of 300. Or if you wanted to estimate, see, 1/3% would actually mean 1/3 out of 100 is the same as 1 out of 300. So just keep in mind that this is less than 1%, and then you'll be okay. All right, well, that's a little review of what we did last time. Also, in section 3.2 now, and what we actually did this last time, we did percent of increase and percent of decrease. Did that. Percent of increase, percent of decrease. Before we do that, let's go ahead and review let's review how to take a fraction and turn that into a decimal, and then turn it into a percent. So let's take the fraction 2/7, first convert it into a decimal, then convert it into a percent. All right, so how do you take 2/7 and turn it into a decimal, Robert?
2 divided by 7.
Very good. So grab your handy-dandy calculator, and hopefully you'll remember to bring your calculator every day, class. So take 2 divided by 7. Now this turns out to be a repeating decimal, and it's no big deal, but you get 0.2857 and a bunch. A 1 is next. If we wanted to round that to 4 decimal places, does this 7 stay as a 7, or do you bump that to an 8, Courtney?
It remains at 7.
Yeah, it stays at 7 because the 1 is less than 5. So now let's just leave that as a 7, so 0.2857, and then change that into a decimal. Change that into a decimal, Rachel. I mean into a percent, sorry. Change 0.2857 into a percent.
It'll be 29%.
Correct. And that's if it was rounded to the nearest percent. Which, by the way, that's what I do. When I compute all of my percent profits and everything else, and so my wonderful wife, in about 15 minutes, when the market opens, she's going to close one trade, and she's going to open another trade. And so here's a real practical application of this that my wife's going to be doing right this morning. Real practical application of percents. So this morning, we have a trade on Alexion Pharmaceuticals, ALXN, which, by the way, is a very fascinating story of Alexion Pharmaceuticals. I went to an entrepreneur seminar, by the way, another shameless plug for our entrepreneur seminar. For you online students, we have it every year. It'll be the week after Valentine's week, that Thursday and Friday. So 2014, it's February 20th and 21st. So in 2015, you'll have to look on the calendar and see what that week is after Thanksgiving, or whatever year you're taking this wonderful course called Business Math. But anyway, I went to a seminar in Oklahoma City, and it was an entrepreneur seminar, and I got to meet the 2 guys that started Alexion Pharmaceuticals. They were graduates from OU, and they decided, they were both like chemistry majors, and they decided to start actually a chemical company selling drugs. A couple of entrepreneurs from OU. So they became a couple of drug dealers from OU. The good news is they're legal. They're legal drug dealers. To make the long story short, after they built this company up, they sold it for $4 billion. That's just incomprehensible to me. But anyway, so that was just some interesting trivia. Well, this morning, my wonderful wife is going to close a trade that we have on Alexion Pharmaceuticals. And the trade was set up something like this. I'm going by memory, so this is dangerous, but pretty close. 428 was our maximum possible profit. Okay? No, actually, I think it was 488. Sorry. The numbers are starting to come back. 488 was the max profit. And the max loss on this trade The max loss on this trade was $512, okay? Now, I'm not going to be on the scope of this course to explain the total, it's a stock options trade, that I can actually set up my max profit and my max loss going into this trade. Now, one of the things that we do when we put on this trade is we first of all calculate this percent of max profit to max loss, because this is how much TD Ameritrade is going to hold in my account. So TD Ameritrade is going to hold $512. All right? They're going to hold that amount. So I want to know if I hold this all the way to January 2015, that's when this trade would expire on its own. If I hold this trade and it stays above a certain level, and right now the stock is way above that certain level. In fact, the stock has been going like this, and then it just went bonk, just like way like that. I mean, it just took way off. And these levels aren't that important to this, because we're talking about percent. But the question is, here's the question. I want all of you to work on this, and then I'll ask you the answer, okay? So all of you grab your handy-dandy calculators, and this is a very practical percent problem. Tell me what my maximum profit would be as a percent of my max loss. In other words, this is my amount that they're holding. That's the amount that TD Ameritrade is holding. So if I held this trade all the way to January 2015 and it stayed above the designated level, I would get my maximum profit. And what percent would that be? What would the percent return be on investment? We call that the ROI. Sometimes we call it ROI, return on investment. Sometimes it's also called ROC, return on capital. So this is a business math course, and that's why we're taking a business application here. All right. Let's go to Courtney and Woodward. What percent did you get for your max profit? In other words, the ROI or the ROC. What did you get? See, pretend we got the entire max profit, $488, and they were holding $512. Okay? So that's what you're pretending. So my question is, the capital that's being held, just a few more terms, because I know this is pretty strange. This is the capital being held. That's the capital. We call that the capital being held. And if everything goes well, which it looks like it would make it to January 2015, no guarantee. But it looks like we would capture $488 out of $512. So we want to convert that to a percent. So for starters, Courtney, is that less than 100% or greater than 100%? In other words, is the max profit less than 100% of the capital being held, or is it greater than 100% of the capital being held?
Less percent?
Very good. So it is less than 100%. In other words, if the max profit exceeds 512, well, then it would be greater than 100%, wouldn't it? That's always a good idea because it helps you in getting your answer. You know, as we go through the problem-solving situation of you die, remember that, you die, understand the problem. That's very, very, very important. See? You got to understand all the parameters of this problem and all the assumptions. Then you got to devise a plan. All right? So the plan is we're going to try to compute that what percent, make sure we also understand the question, what we're trying to find is, what percent is max profit of max loss? So that's the question. So Courtney has helped us a lot. She said it's going to be less than 100%. Rachel, what'd you get for your answer?
34%.
34%. Okay. Jonte, what'd you get for your answer?
95%?
95%. Now let's just take those two answers and try to analyze which one is more reasonable. Now 34% is about 1/3, isn't it? Because 33 1/3% would be 1/3. So the question that you have to ask yourself, we're all the way down to now evaluating the answer. We have two answers we're evaluating, by the way. 512, if you took about 1/3 of 512, do you think that would give you $488? What do you think, Rachel? If you take 1/3 of 512, do you think that would give you about $488?
No.
No. So in other words, and in fact, half of 512, half of 500 is 250. So in fact, we know this answer is going, because 488, it's bigger than half. So we know the answer is someplace between 50% and 100%. So Jonte's answer of 95%, it sounds pretty reasonable. Sounds pretty reasonable. Okay, let's see. Let's go to Wyatt. What did you get?
94. I got 95.313.
There you go. So in other words, you agree with Jonte.
Yeah.
Okay. So let's see. And now, Robert, you're going to get to explain to all of us what to do, because I'm going to take my handy-dandy calculator, and I'm going to do what you're telling me to do. So go ahead, Robert. Tell me how to do this.
I did 488 divided by 512.
Very good. So you take 488. You see what I'm really interested in when we're doing a return on capital. I'm going to give myself a little bit of room here. When you do a return on capital is actually computed by taking your return divided by the capital. That's what a return on capital means. A return on capital means you take your return, 488, divided by the capital that's being held, 512, and when we put on a trade, this trade, by the way, was put on last fall. This trade we put on, I believe, in about September, or maybe it was October. I'd have to go look it up, but that's not important for right now. Okay? So when we put on this trade, just like now, the stock market's going to open here in about 3 minutes. And my wife loves this, by the way. I wouldn't have her do this if she didn't enjoy it. But it sure is neat that she enjoyed it. So she's getting ready right now. It's almost like the in the starting blocks. Bing! When the bell hits at 8:30 and they're off. And it's pretty exciting. And so then my wife has to start dealing. If you've seen any trading show, she's not standing in the pit yelling. She's at her computer, sitting on the couch with our 12-pound Jack Russell at her side. And she is, instead of yelling, she's putting in various limit prices to try to get out of this trade of Alexion Pharmaceutical. Okay? That's what's going on to Alexion Pharmaceutical. Now, way back in September, when she put on this trade, she put on the trade, and she got $488 max profit now. You know, you don't get the 488 right when you put the trade on. Put that in September, and we were willing to wait all the way to January 2015. But this is what she actually computes every time she puts on a trade. And she doesn't make very many mistakes anymore. Hey, it's the joke in our household since I lost $160,000 in 1 month trading stock options. Every time she makes a mistake, I just tell her, "You're never going to catch me." In fact, she just pretty much on her own sold one of our rental houses we probably could have got maybe $2,000 or $3,000 more for this rental house had she negotiated properly, okay? She didn't negotiate properly. She realized it, that she cost us probably $2,000 to $3,000, and I just told her, don't worry about it. You're never going to catch me, all right? But she doesn't make mistakes very often. I make bigger mistakes. That's the difference, all right? She's never going to catch me. But anyway, so she takes this and she does the math, and she gets .953 in a bunch, okay? Oh, Rachel, you've reworked it right now and got the .953, right?
Yes, sir.
Excellent. So, and then we've learned, just round it like Jonte did. Just round it to 95%. So this gets recorded on the chart as 95% is going to be the max profit. Now, in about 1 minute, the market opens. We have this, I set this trade up last night to sell so that it would cost us $70 to get out of this trade. $70 to get out of this trade. I'm going to erase some of this stuff now. Okay, keep that 95% in mind. All right, keep that 95% in mind. And I'm going to go ahead and erase this right in here. All right. We've decided that since we can get, when I say it costs us $70 to get out of this trade, it means we're going to capture all of this 488 except $70. We call that, we're going to leave $70 on the table. Cost $70 to get out of the trade, to exit the trade. All right? Cost $70 to exit the trade. So we're going to leave $70 on the table because for us, $70, see, that'd still hold the 512 all the way to January 2015. For us, as traders, nah, that's not good enough. And since the stock, I just told you, got way down here, the stock did like this, and then it went way up here like that. Well, you know that I told you one of the things about, especially when we do statistics, it's a thing called regression to the mean. That stock's probably going to come back to some sort of average place. So when it comes back, then we might get into the trade again. But for right now, we're going to lock in the profit. We're going to get out. It's going to cost us $70. So instead of $488 of return, it is going to lower our return, isn't it? It's going to lower our return from $488 to how much, Robert? $418. So it's going to lower our return to $418. But it's going to free up this $512 of capital. So now you know why we're exiting this trade. We're going to exit it for a couple reasons. One of them is it just shot way up. It's ridiculous right now. In fact, so the price is probably going to come back to some sort of an average line, which we call the linear regression trend line. That's what we call it statistics. But in any case, so we're exiting the trade. Now, when we exit this trade, are we going to have a 95% profit? Are we going to have a 95% profit, Wyatt, when we exit the trade?
No.
No, because we left $70 on the table. We left some money on the table. But I've learned a long time ago, it's better to go ahead and leave a little bit of money on the table. Don't get too greedy. Just go ahead and leave that $70 on the table. Hey, it's okay. I'll exit the trade. I'll let somebody else have that $70. I'm going to just lock in my profit of $418 out of $512 of capital. Now we have a new problem on our hands. Now my wife, as soon as this trade closes, and it may take her, usually her trading takes her, about a half an hour to an hour every morning. And she loves the game because she's actually better at it than I am as far as getting the most money out of the market maker because she is more patient than I am. I'm not as patient. I just say, just get out of it. Let's just exit the trade. So what if it costs us $80 instead of $70? So she's good at squeezing an extra $10 out of the market maker just by being patient. Well, anyway, now we have a new problem to calculate. The new problem to calculate is what's our actual percent of profit on this trade? Go ahead and calculate this. What's our actual return on capital percent on this trade? Well, you've got to go ahead and do the math right here, don't you? So, Rachel, what did you get?
81%.
91%? Is that what you...
81%. 81.64%.
Oh, you said 81.64%.
Yes.
Okay? And so when you round that to the nearest percent, what do you get, Jonte?
82.
You get 82%, right? So on the chart today, my wonderful wife is going to take and put 82% profit on this trade. Now, by the way, this is not a personal finance class, but it's extremely important. Even though it's a business math class, I'm going to ask you this question anyway. If you get 82% profit on a trade from September 2014 to September 2013 to January 2014, would you classify that as a high-risk trade or a low-risk trade? Just take a guess out of the blue, Rachel.
High risk.
Yes, definitely. It's a high-risk trade. If anybody tells you, oh, we made 82% profit on this trade on Alexion Pharmaceuticals from September to January, you know without a doubt that's a high-risk trade. I'm just trying to emphasize that to you, all right? I don't want you to grow up to be a trader, not unless you really, really, really want to put in your 10,000 hours of study, all right? I study 3 hours every day of stock options. Well, anyway, that gives you a real practical problem of percent. So then my wife marks this on the chart that there was an 82% profit on this trade, and then she actually takes this Alexion Pharmaceutical, the chart of Alexion Pharmaceutical, and puts that in a different folder. We keep track of this all electronically. She puts it in a different folder called the winners folder. We have another folder called the losers folder. Because obviously we don't get 80, that would be cool if we got 82% profit off of every trade, and it happened only, September, October, November, December, January. 4 months, we get 82% profit on every trade. That'd be pretty cool, wouldn't it, Jonte?
Yes, sir, it would be.
Yeah, that would be pretty cool.
Make some money.
Yeah, that would be some pretty good money. 82% profit in 4 months on every trade. It's not going to happen on every trade, is it?
No.
No. In fact, I have some losses. You can probably imagine that. Well, anyway, now let's go over percent of increase and percent of decrease. All right? Let's stick with this stock. You can probably tell I'm having way too much fun, right? Totally unfair, right, Rachel?
Most definitely.
Most definitely. This is not even close to being fair. Well, what I'm going to do, since I'm having a blast, I'm going to go to Google Finance, and we're going to get another real problem. Because in Section 3.2, you're supposed to be doing percent of increase and percent of decrease. Okay? Now, I'm not going to read to you. I hated that as a student. I still hate it. So, your author goes over some really, really good examples with M&Ms and word problems. You need to read and study those. I'm not going to read that to you. Besides, I like the stock market better than the word problems that they do. Okay? We'll come back and look at some of those maybe, but I want to do percent of increase and percent of decrease. Okay? Percent of increase, percent of decrease. By the way, when you do percent of increase and percent of decrease, you need to have this written down. These are some really good notes to write down. Your percent of increase, it's the increase divided by the basis. Okay? You need to write that down. And the percent of decrease, is what over what? Wyatt.
And again.
See, the percent of increase, it's the increase divided by the basis.
I turned it off. It's
And the percent go ahead.
it's the decrease over the basis.
Very good. It's the decrease divided by the basis. So these two things, hopefully you have those written down. All righty. Well, let's do a real-life math problem now. Let's go over to Google, and I'm going to go to Google Finance. Google Finance. All right, here we go. Google Finance, stock market quotes. And just for fun, let's do Alexion Pharmaceuticals. And I know it's ALXN. You could actually type it in. But I know it's ALXN. All right? So, Alexion Pharmaceuticals went down a little bit this morning, which means my wonderful wife, maybe it cost her $80 to get out of this trade instead of $70. You see, it's pulling back a little bit. Okay? Now let's go to some charts. Let's go to a one-year chart right here. Here's a one-year chart of Alexion Pharmaceuticals. And you see, I wasn't kidding when I said, you see how it just recently just shot way up to here? Well, probably it's going to come back to some sort of linear regression trend line. It's probably going to come back to here. In fact, it's already starting to come back today. When it comes back to here, then we'll put on another trade with Alexion Pharmaceuticals. Because you got the idea. We get into trades here, and we get out of trades here. You know, that's what we like to do. You know, buy low, sell high. This is not anything brand new, is it? All right. So here we go. I said we entered the trade. Now we're going to do the actual percent of increase on the chart. Okay, so I'm going to see if I can get a, let's see, I'm supposedly on a one-year chart. So I'm going to go back to, I said about September. There you go, that's close. Oh, that's the wrong September, isn't it? Let's see if we can get the right, I don't know why this chart is, this is not the charting service I use. I use the, let's try again. There's year-to-date. By the way, now you can see that big, gigantic jump. Boom! Right there. Now you know why we're getting out. See? Now you know why we're exiting that trade. I gotta hurry. If I don't have to find it, if I can't find it off this chart, I'll just have to make it up here pretty soon. All right, here we go. I think we're gonna be okay. Yeah, we got it. All right, so in the upper left-hand corner, it's not that important, but it's the exact price, but we'll just get it. All right, there's September. So the price is $110.17. I'm just going to round it to the nearest dollar. $110. You might want to write that down. When we started the trade, Alexion Pharmaceuticals, this was in September of 2013, it was $110. Well, let's just do the whole thing. $110.17, okay? When we got into the trade. Now we're exiting the trade today, and if you notice the stock today, it's bounced up a little bit. We'll just say, since my wife is a better trader than I am as far as being patient, that she's waiting. She watches the 1-minute ticks on the chart. So let's say that this is January 2014, that she gets out, bam, right now, 160.76. Okay? You can see the price keeps changing there in the upper left-hand corner. So let's go back to here, and we're going to do percent of increase on Alexion Pharmaceutical. We're going to do Alexion Pharmaceutical. I messed up again, didn't I? We're going to do percent of increase on Alexion Pharmaceutical. Now, hopefully, you wrote those things down that I told you. If you didn't, write them down now. September 2013, when we entered this trade. Now, we did it with stock options. I'm just showing you stocks right here because it's less complicated. So January of 2014, the stock was at 160. So what we're going to do is we're going to compute your percent of increase had you just traded the stock. I traded stock options. Now, stock options, that's a two-edged sword. Meaning when you win better than the percent that the stock wins. And when you lose more than what the percent of the stock lost when you're using stock options. It's called leverage. That's what it's called. So it's a two-edged sword. Now we want to do the increase divided by the basis. So let's see if we can do this. Increase divided by the basis. So we have to have the increase from 110.17 to 160.76. So on your handy-dandy calculator, calculate that for me, and then I'm going to call on you and ask you the increase. It went from 110.17 to 160.76. Okay? So what increase did you get, Jonte?
Give me 1 second. I'm putting on my calculator.
Just the actual dollar increase. We'll come back to you. Courtney. Now we'll come back to Jonte.
It's an increase.
Yeah, what is the increase? What'd you get? Not percent, just the actual dollar increase from $110.17 to $160.76.
51.
$51 if we round to the nearest dollar. Now, I don't want you to round it until the very end. So you write $50.59. That is the increase, okay? So don't round this till you get to the end. That's a good technique, a good thing for rounding, okay? Then, here's a good question. What was our basis? What was our basis? Let's go to Robert.
110.17.
Very good, 110.17. Now on your handy-dandy calculator, you're going to calculate your return on investment had you bought one share of Alexion Pharmaceutical stock on September last year and then sold it right today for $160.76. So, what did you get for your percent of increase? Go ahead and do the or take the calculator right now. And what did you get, Courtney?
46%.
How much did you get?
46.
Good deal. That's what I got. I got 0.46 or 459 and a bunch. Now we'll round it to 46%. So, had you traded the stock, you'd have a 46% return on capital because they would actually hold, because you bought, they would hold the $110, didn't they? Because that's what you're tying up. You're tying up $110. And then, this is if you just did one share of stock. Now you can do more than that. We're just pretending one share. Then your profit was $50.59, and so your return on capital was 46%. So if you traded the stock, your return on capital was 46%. I traded the stock options, so my return was, what, 80-something? I can't remember. About 82%, something like that. Anyway, now let's see if we have time to do a quick percent of decrease. Let's take a stock that's really been decreasing. let's take a stock that's been decreasing. You're gonna have to hurry on this one. Let's see. Oh, probably J.C. Penney. Oh my goodness. J.C. Penney has been having lots of trouble. J.C. Penney has just been going nuts, going down, down, down. J.C. Penney has just been having all kinds of trouble. All right. So let's say in that same time frame, you bought one share of J.C. Penney at $13.45 way back in September. $13.45, write that down. $13.45 for J.C. Penney in September. Okay. Now you sold it today. You finally just said, Uncle, and you sold it today for $5.82. Okay? So, September, it's January right now. You just said, I give up. Shoot, the stock may go to zero. And it may. It may. All right, well, now we need to clean this up a little bit. We're going to do percent of decrease this time, and we have to hurry. So, real fast. Percent of decrease, it's the decrease divided by the basis. So, we got to compute the decrease divided by the basis, keeping in mind that we bought this stock from J.C. Penney at $13.45. We bought it at $13.45, and then we sold it today at $5.82. So we need the decrease. Now just see, boom. Mentally, the decrease is going to be about $8, right? What did you get for the decrease, Courtney?
$7.36.
$7.36 was the decrease. The basis is what we started at. We started at $13.45. Now on your handy-dandy calculator, you know that that's over 50%, isn't it? So what did you get when you took 7.36 divided by 13.49? Rachel, what'd you get? Take 7.36 divided by 13.45. Oh, press your mic, Rachel.
It'll be 55%. It's 0.54721.
There you go.
Yeah.
And then when we round it, that is a 55% loss. Wow. Now, some people like to put a negative sign up here. Some people like to put a negative sign there. Some people like to put a negative sign there. Because we lost 55% on our return on investment there. Our return on capital was negative. We lost 55% on that particular trade. And see, I don't have time to calculate that with options, but if we did, the loss would be bigger than 55%. Okay? You guys did great today. Online students, watch Blackboard for the quizzes, and you're keeping up really well. Good job. I'll see you next time.
Next Monday? This Monday?